All right, BEP family members, welcome to this week's video here. We're going to kind of walk through the light sweet crude market here, have a little quick chat about what we're seeing, where we've come from, where we currently are, what our current expectations might be to both the upside and the downside as we look forward into this week. So we have yet to trigger a WTI trade, and I'm going to share with you why. For me, I need a clear area of where I'm going to exit, where I'm going to exit that area I identify as a profit window. And I need to know that I have a large enough area of profit potential in comparison to where I'd have to place my risk. So this is looking at the current contract, which is the CLH 2023 or the CLH 23, depending on which platform you're using. It is the March contract. If you're using NinjaTrader, I think it would be the O3 of 23 contract. So this represents obviously a time in history here. This is June, July of last year when the market really went kind of wild. So we were hovering around this area in March. Russia invaded Ukraine. We're all familiar with the consequence that kind of came with that. Big market reaction, rallied up. Now these numbers do not represent the highs at that time, simply because we're currently trading at that time what would have been considered a forward expiring contract. So at the time, this contract obviously experienced a rally, and then we've really been kind of since then trending to the downside. So we're currently trading at 81.55 ish. The market just opened its Sunday evening, and I just want to share my thoughts with you. So what happens where we currently are is this: the $80 price point is extraordinarily valuable to OPEC or OPEC plus, and OPEC plus is the oil producing countries. Plus represents Russia included with them. That $80 mark, and it's not doesn't have to be precisely $80, but somewhere around $80, plus or minus a few percent, um, is the right number in their opinion. And I say that simply because of this. By the right number, I mean the byproduct of crude oil is affordable, or affordable enough that people continue to buy it, they continue to travel, they continue, to so on and so forth. It doesn't hinder their lifestyle. It's cheap enough that we're able to refine it and turn it into the products and services that we all need. Now, with that statement being made, they're making enough profit in this $80 area that it's obviously cost efficient for them to continue to extract the oil from the ground and bring it to market. Now, we look at the stock market particularly as what we call a free market, a place where buyers and sellers really get to come together and decide what something is worth. And that's ultimately what we do as traders. Now, we have to understand, especially as oil traders or energy traders, that we're kind of along for the ride. We're along for the ride of, really what OPEC decides that the product is worth. Now, the market itself decides what it's worth in the moment. But OPEC overall is the one that decides how much of the spigot is turned on or turned off. And that does, of course, it is a lagging way to adjust what the price of the barrel is worth. So for us as traders, we just have to focus in on what we're able to. If you were trying to follow the fundamentals and every little information and news excerpt that affects energy, you would absolutely positively lose your mind. I can assure you of it. But what we can do is identify areas of support and identify areas of resistance, identify areas where there is potential profit. So the market has certainly been trending to the downside. Our 200-day moving average is above our 50-day moving average, which also, reinforces that downside move. And where are we right now? We're at a known area that the market is likely to find resistance and potentially fall from. So we found resistance here. This is back in November. We found it here, and this is back in June. And if I put those two tops together, it kind of tells you right about where we are right now. So we tested it just recently, January 18th, 2023. This was just last week, and we are currently here right here. This is Monday, which would be tomorrow morning. This session does run Globex, meaning it starts at 6 p.m. at night and then goes a full, basically 24 hours, 23 hours, and 45 minutes. So if we continue to hold in this area, we could break above. If we break above, we would have the 200-day moving average as potential resistance, and we'd also have this little descending minor channel top as resistance above, which would likely contain price around $87. If we break a substantially long-term resistance channel. So when we tested it on the 18th, you could see there was big selling volume that came in. So we rallied, and then price reversed. So we're back to retesting this here. I would like to see if price is going to retrace lower. I'd like to see price close below the 50-day moving average. You can see here it closed below it and extended. Here it tested it, extended, tested it, extended, closed above it, and is now using it as support. So if I was looking to take a short position from this point, potentially lower into the we'll call it the mid $72 area, I would need to see price trade below the 50-day moving average, close below it, ideally by more than 1%, and also close below this ascending dotted channel structure here. So I'm just working off of these lows here. So price could likely tighten into this what we call a wedge or a pendant. You can see that this dotted channel line is ascending. This solid channel line is descending. And price could spend several days, even several weeks, tightening into this corner. But ultimately, if we pop out, we have the opportunity to test the 200-day and the structure above. Or if we pop below and close, more importantly, not only popping below, but closing below the 50-day moving average, could afford us the opportunity to then move us even lower into this mid $72, even $73 price target. So this is what we're looking for right now. And this is purely trading price action. If we can get some other indicators to support the move, fantastic. But purely trading price action, as we have this opportunity here for price to trade into this tightening area or tightening sequence, we're either going to break above and potentially go higher, or break below and potentially go lower. So this is what we're watching for, and this could afford the opportunity for price to run, either $3, $4, $5 to the upside, and just the same $3, $4, $5 to the downside. So there is substantial profit potential here. We're not talking about a few pennies. We could be talking about some serious money. So keep an eye on your inboxes. You're going to want to make sure that when this does happen, that we are prepared to employ some action upon it. And I'll be in communication with you. So I just want to take this opportunity to recap the week with you, let you know what my thought process is going into next week. Let you know what I'm seeing, why I'm seeing it, what may likely transpire next. And I'll speak to you during the week if I can help you. Please feel free to shoot me an email. But outside of that, I just hope you have a great day, great week. And this is Anthony Speciale. I will talk to you soon.